And now, in studio, bringing his Midwest values from the Show Me State to the land of San Diego. He's a triple threat, licensed as an attorney, mortgage broker, and a top producing realtor who's crushing the competition. Here to deliver you what's happening in the trenches of the market. Your host, Michael Gaddis.
Welcome back to the Michael Gaddis Show on AM 1170 The Answer. I am Michael Gaddis, your host of Frontier Loan Group and MichaelGaddis.com. That's MichaelGaddis.com and Frontier Loan Group. Sorry for the little delay, but my headphones are just blaring away. This is a very loud headphones today. So anyway, I want to thank everyone for listening again, and I want to thank our Facebook crowd for tuning in here today. And we're going to talk a little bit right now about shopping for loans. So whether it be you're in line for purchasing a home, you're in line for a reverse mortgage, you're shopping for a refinance, it is really important to shop and make sure you're getting the best deal that you possibly can. And I think everybody knows that, but there's a lot that goes into loans. Not all not all mortgage loan originators are the same. And I think that a lot of us have the ability to do things that other people cannot. So sometimes someone will tell you, oh, we can't do it, but that doesn't mean that somebody else can't. So like last week when we were talking, I talked to you that we call ourselves the loan doctors, because a lot of times we specialize, and I don't know why this happened, but the niche that I have seen to have come into is basically doing triage on other loans that people send me. Basically, they're in the middle of either a refinance or they're in the middle of a purchase, and they're having difficulties of some sort, or even reverse mortgages. I have definitely had a lot of that, where they're challenging scenarios. And part of what I have to do is really thoroughly analyze it to see if there's a way, one, to identify the actual problem, and then number two is to see if there's a way around that problem. And, as I said, I wish all loans went through perfectly smooth, but they don't. And I think the one thing that you can all take from this segment is that loans are difficult. Think of it this way. Back in the day, years ago, and I mean back in the day, meaning, pre-housing crisis, when we had stated income loans were on this side of the pendulum. Basically, all you needed was a good FICO score, and basically you could go in and you could tell the bank how much you were making. They're called stated income loans, and you were getting loans left and right. The underwriting on them was very simple. They didn't ask a lot of questions, and that was it. And of course, after that, we have the housing crisis. And, you can imagine where that came from when you have a bunch of stated income loans walking around. So what happens then is the pendulum has swung all the way to the other side. So now loans are all full doc. And because of Frank Dodd, there are so many levels of quality control, QC. So you have lots of different underwriters that have to look through these loans. So what is an underwriter? Well, an underwriter is somebody who analyzes, who basically goes through everything in your loan application to see if it meets with the underwriting guidelines. So I call them the goalies, kind of. They're like goalies. Their job is to basically kick out the bad stuff, let the good stuff go through. And that's where it gets difficult, because when it comes to calculating income or just lots of different reasons why loans cannot make it through the QC. And so what happens, here's a good example too. When you get a loan, pre-approval from a lender, a pre-application, a pre-qualified letter or a pre-approval letter, a lot of times that's done without the underwriting being completed. So basically what happens is you can run it through an automated desktop, it's called DU, desktop underwriter. Basically it's an automated system that you plug in information, it runs the credit, runs the scenario, and determines whether you pass or fail. Now keep in mind this, that it is dependent on what the person puts into the system. So the system is not the one that calculates your income, you're the one that puts the income in there. So what happens is, if you get an approval, an underwriter has to go through it, and they have to basically determine if you calculate the income correctly. Now remember, it's how they want to calculate the income. So a lot of times, loan officers get into income calculation disputes. Like, you should calculate the income this way, or no, we're going to calculate it this way. Especially if you're self-employed and you have more complicated income, it can really be a difficult endeavor. So, it's really important that you go with a knowledgeable loan officer, especially if you don't have one of those cookie cutter deals. Don't get me wrong, we all like the cookie cutter ones. The perfect candidate that has, a 760 FICO score or above. They got, 25% or more equity in their home. They can go full doc and have very low debt to income ratios. Their housing ratios obviously are low as well. So we like those types of people. But even those people can get run through the ringer. I had a doctor not too long ago who went through, and his debt to income ratio was like 14%. And the underwriter kept questioning him on his income because his income was derived from a W-2, but he also had elements of self-employed income. And they were going through and asking for more documents and asking for letters of explanation. And it was really frustrating the doctor. And the doctor said, "Why are they doing this to me?" And I said, don't take it personally. It's just, getting these, sometimes it's like those old World War II movies. I don't know if you've seen it, but in the old World War II movies, you had the bomber pilots, and they were trying to go over and do the bombing. And while they were there, you had all these people trying to shoot them down. The plane was shaking. The pilot's face was all black with smoke. The wing was on fire. There's all these little holes all throughout, and the pilot's all stressed out. That's basically some of what getting a loan is. It's like being a loan officer. It's like being one of those pilots trying to get you through that. And so I think a lot of it comes down to just, as I said, knowledge and experience. Anticipating what could be a problem. We talked about this last week when we talked about the loan doctors. One of the things we try to do when we shop for people in our office is we try to look at it as an underwriter would. What would an underwriter have problems with? So we just don't look at your income and your FICO. We look through everything. We look through, what's your current mortgage payment versus what's your proposed mortgage payment, so because we anticipate for payment shock. We try to, make sure you can source your down payment amounts. There's a lot of things that we do to try to anticipate what problems might occur. And I think that's really important when you shop for loan officers, is trying to find somebody who really understands how it works. You're listening to the Michael Gaddis Show on AM 1170 The Answer. I am your host, Michael Gaddis of FrontierLoanGroup.com. I want to take us a little bit into why you should shop, especially for a reverse mortgage proposal. I'll give you an example. A lady who was actually listening to this show called me up after, I'd say a couple days. I'd say it was probably 7 months ago, but she listened to my show on Monday, and she called me a couple days after she listened to it. And she said, "Michael," she goes, "I heard you on the radio talking about reverse mortgages. I want to know if you can look through my proposal. I'm in the middle of a reverse mortgage, but I don't feel comfortable." And I said, "Well, why don't you feel comfortable? What makes you uneasy?" She goes, "Well, the loan officer that I have either won't answer my questions or glosses over my questions and just moves on." And she goes, "It just really concerns me. He's just pushing me to get an appraisal." And she goes, I just feel in my heart that something's wrong. Can you take a look at it?" So I said, "Sure, send it over to me." So sure enough, she sends it over. I look at it, and I think it took me 45 seconds to realize that something was off. Because one of the things I like to do, especially in reverse mortgages, is there's a lot of algorithms in there. There's a lot of equations and formulas. And I like to double check the computer a lot to make sure that the numbers that are being generated match my manual numbers. So the first thing I always do is basically go through and manually determine how much you can borrow on a reverse mortgage, because it's a formula. So when I did that with hers, I noticed that my number was higher than the number in the proposal. And I said, "Well, why is that? That's unusual." I said, "The only thing that can cause that is if the person is giving them too high of an expected interest rate. And if you exceed 5.06% expected interest rate, it will cause the eligible principal balance to be decreased." So I went up there, and sure enough, it was higher than 5.06. So I'm like, why is he giving her such a high margin and causing her expected interest rate to go up? Maybe he's giving her a big credit to help offset some of her closing costs. So I looked down, and nope, there's no credit for closing costs. In fact, not only is there that, but he's charging her a $6,000 origination fee. And I'm like, okay, wait a minute. So this guy's charging her a super high margin on the back end, causing her eligible principal balance to go down, and he's charging her a $6,000 origination fee. And I was like, boy, this is a doozy. Because here's what's sad about this. This woman was 81 years old. She lives in Oceanside. She has no family whatsoever. She has, her house payment alone is $1,100 a month. She only gets $1,800 a month in income. So she only, after paying her mortgage, which is not including taxes and insurance, mind you, she only has $700 a month to pay for her car payment, her utilities, her food, her credit card payments, all of that. How was she doing it? She wasn't. She was subsidizing out of her income every month from her savings, and she didn't have that much savings left. So she was literally on track to basically be kicked out of her house, be forced to sell her house very soon. And she didn't want that. She wanted to live in her house for the rest of her life. So, you know, the other thing I looked at after looking at this was that I knew she had enough to pay off, in both proposals, she had enough to pay off her mortgage payment. But, you know, with a reverse mortgage, you can also establish a line of credit with what's left. In his proposal, because of numerous issues, her line of credit after he was done was only $6,000. So when I reran the numbers and I fixed the expected interest rate, I knocked the origination fee out, and I gave her some credits for closing costs, her $6,000 went to $23,000. Just like that. So just like that, I was able to switch around, give her some extra money in a line of credit that grows, and it was able to, to give her a much better deal than what that was. And I think the only reason I'm telling you this story is because it is important to shop loan proposals. It's very important, whether it be a reverse mortgage or a forward mortgage, it really doesn't matter. It's important to shop, and it's important to compare. It's important to test the knowledge of the people that are helping you. Because, you know, you need to make sure that whoever is putting you through this process, it thoroughly understands it, and is ready for any type of, hurdles that might come up. And I think that that's important because, you know, there will be hurdles that come up. There will be times when you have problems with your loan. And so if I'm doing a loan and I don't have a problem and it's getting close to escrow, I'm getting nervous because I know something's coming. It's going to hit me from left field or something like that. So, but I try to anticipate every single time what the proper way to put a proposal together and how to anticipate all those problems. So shopping for loans is really, really important. Well, anyway, after the break, we're going to come back for our last segment of the day, and we're going to talk a little bit more about real estate. So you're listening to the Michael Gaddis Show on AM 1170, The Answer.